Let's begin with the big issue. Markets counting down to the G20.
So much attention is going to be on Osaka.
Keep your eye on the G20.
The G20.
G20.
Everybody's waiting for the G20 meeting.
The G20 is important.
Trade tensions could easily reverse.
Maybe there's going to be a trade deal.
Depending on how G20 talks go.
Between Xi and Trump.
Xi and President Trump.
Don't expect a trade agreement this week.
As long as there's not a lot more negative news, we think that that will be constructive.
We probably will end up with a standstill agreement.
Let's see what the trade talks take us.
Clearly, there's a lot still hanging on the trade war.
So the key question, will this week's meeting give the markets the clarity they've been looking for? Joining me now around the table, Michael Shaoul of Marketfield Asset Management, Jay Pelosky of TPW Investment Management, and Thierry Wizman of Macquarie. This is the key question, Michael. What are investors looking for in terms of clarity? What is the best case scenario?
Well, best case scenario would, I guess, be what we saw in December, where the two presidents sat down and came out with the outlines of an agreement. I think that's a low possibility at this point in time. I think the best realistic possibility is an agreement to talk, is a holding off of additional tariffs, and the sense that the people underneath the presidents are really sitting down and trying to hash out the main issues.
Jay, U.S. stocks, do they rally if there is some sort of outline along the lines of what Michael just said?
I think they do, but they rally less than the rest of the world, right? The real opportunity, I think, is outside the U.S., particularly if there's any kind of positive news on the trade front. The non-U.S. markets are still 20% off their 2018 high. The U.S. is at all-time highs. Valuation difference also significant. So the opportunity, I think, if there is a deal or even talks to have a deal, because I don't expect the deal either, right? I think it's going to be a can kick, and we'll continue to talk. No additional tariffs by the U.S. So I think that's pretty much in the price. But if there is action, I think the action is more outside the U.S.
That's an interesting point. So risk tends to do well when there is some kind of feeling of resolution with respect to a trade deal. Terry, what about rates right now at a time with yields nearly the lowest since 2016 in the U.S.?
Yeah, the trend has been for the long bond yield to come down as people anticipate a more dovish Fed. It's not always been that case historically, but this time it certainly has been the case. Let's say that there's an escalation, and after the G20, the U.S. slaps 25% tariffs on the rest of the Chinese products that aren't subject to it now. What will happen? The Fed will probably cut rates by 50 basis points, not 25 in July. In fact, the Fed funds market, futures market, is now pricing in about a 30% chance of a 50-bip cut. That you can infer from that the markets are already also pricing in a 30% chance of an escalation. In any case, if there is an escalation and the Fed cuts by 50 basis points, the yields will go lower.
It just raises a question. How do people price that in? A 30% chance of escalation when people have no clue.
Because they're forced to. Markets always have a price, and you can infer things and probabilities from those prices. Those prices may not be right, but that's what the market's telling us now.